Hello everyone, welcome back to this week's Technical Insights. Last week, all three major US indices continued their decline for the fourth week in a row as worries about a global trade war grew. Although we did saw a rebound on Friday after US Congress agreed to fund the government through till September, that helped to claw back some of the steep losses that we have seen over the week, as investors also got a break from tariff-related headlines. The Dow Jones Industrial Average rose about 674 points or 1.65% to close at 41,488 points. S&P 500 index climbed 117 points or 2.13% to end at 5,638 points. The Nasdaq Composite Index advanced 451 points or 2.61% to end the week at 17,754 points. The increase on Friday are the largest for the S&P 500 and the Nasdaq Composite Index this year. Big tech shares that were the biggest loser earlier in the week also saw a sharp recovery on Friday. Nvidia shares gained more than 5%, while Tesla shares jumped nearly 4%. Facebook Meta platform also recovered close to 3% on Friday. Analysts and investors are waiting for the outcome of this week's US Fed meeting to see if last Friday's rebound would be a start of a recovery rally or just a pause to further downside. In economic news, we also saw the University of Michigan survey consumer sentiments fell for a third month in a row, dropping to 57.9 in March from 64.7 last month. For the trading week, the 30 stocks Dow Jones Index fell 3.07% for its worst week since March 2023. The S&P 500 Index and Nasdaq Composite Index fell 2.27% and 2.43% respectively and posted their fourth consecutive losses in a row. Last Thursday, we also saw the S&P 500 drop more than 1% and send the broad index into a correction, which is a decline of 10% from its recent peak on the 19th of February, following the same footstep as the Nasdaq Composite Index last week. Gold prices also topped the 3,000 a trout ounce late Thursday for the first time, and gold futures settled on Friday at a fresh record high of $2,994. The safe haven asset has risen 39% over the past 12 months amid worries over high valuation in stocks, geopolitical uncertainties, and the hoarding of the precious metal by central banks that have been moving away from dollar-based assets. Next week on the earnings fronts, we are expected to see companies like Nike, Micron Technology, PDD Holdings reported their latest earnings results. In Asia, Hong Kong stocks rebounded from a 5-day losing streak to close the week on a positive note after a renewed interest in Chinese tech stock that reignite investors' buying spree. The Hangseng Index surged 2.12% or 497 points to end at 23,959 points. The Hangseng Tech Index added 2.31% or 133 points to close at 5,880 points. Chinese tech stocks like Meituan surged over 5% on Friday, with Alibaba Group and Tencent rising 3% each. Analysts from Citigroup and Goldman Sachs have turned more positive about Chinese stocks amid a downturn in the US due to uncertainty arising from Donald Trump's economic policies. Hopes for fresh stimulus to boost China domestic consumption also improved investor sentiment, with investors now eyeing a key briefing this week by Beijing top planning agency. Chinese stocks valuations are still low at this point, trading around 30% under their 2021 high. The Hang Seng Index is priced at 7 times its projected 12 months earning compared to the 20 times for the US S&P 500. In Hong Kong corporate news, we also saw shares of CK Hutchison fell over 6% after a deal to sell a stake in Panama port operators to a consortium led by US firm BlackRock, which drew backlash from China. For the trading week, the Hang Seng Index dropped 1.12%, while the Hang Seng Tech Index lost 2.59%. Back to Singapore, our benchmark index closed lower on Friday, tracking losses in the global markets. It ended last Friday down 1.5 points or 0.04%. Top gainer on the STI index last Friday includes Wilmar, Fraser Logistics and Commercial Trust, and Mapletree Industrial Trust. At the other end of the STI table, Sembcorp Industry lost the most, down 2.13%, while Citrum also declined 0.95%, and Jardine Matheson Holding fell 0.92%. Singapore shares were also down 1.77% after 99% of shareholders voted in favour at their EGM of the disposal of their Australian logistics business. According to SGX's filing, The disposal will allow Sembcorp to have more liquidity and support meaningful deleveraging of their debt. The sale of the Australian business for Sembcorp will also generate around $775 million in gross proceeds, which will be utilized for debt repayment and to issue a special dividend along with the residual proceeds. Sembcorp Industries, which was the top loser on the STI last Friday, announced that its gas sales agreement signed by its wholly owned subsidiary, Sembcorp Gas, with West Natuna Exploration, Amperin Energy, and Coro Energy Duyang was terminated. The gas sales agreement was subjected to regulatory approval in Indonesia, which was not attained. Following the termination of the deal, Sembcorp will continue to utilize its network of natural gas resources to meet demands. Shares of Sembcorp Industries were down over 5% for the trading week. So for this week's technical analysis, let's look at Sembcorp Industries. Last Friday, Sembcorp Industries share price closed lower by 13 cents or 2.13% to finish at $5.96. For the trading week, their share price lost 34 cents or 5.4% for their first losing week in 4. From the chart, we noted that Sembcorp share price has been on an uptrend since the July of last year. Sembcorp Industries' recent high was seen on the 6th of March this year, where it hit a high of $6.45 before retracing back to the low of $5.79 last Friday. Looking at possible support levels, the first will come in at the 50 days moving average, which is the blue line that you see here, now at $5.69, which was a resistance level that was tested in July and December last year, as well as the January period of this year, but we are unable to find a breakthrough. The 100 days moving average, which is the amber line that you see here, is now at $5.50, and that also provided good support for Sembcorp Industries share price in the November period as well. Following the rejection at the $5.70 level in January, Sembcorp share price retraced back to the February low of $5.21 near the 200 days moving average, which is the red line, at $5.24. With Sembcorp Industries share price hitting a recent high of $6.45 in the early period of March, the next resistance level will be the upper bound of the Bollinger Band, now at the $6.54 level. And above this would be the psychological level of the $7 handle. Looking at the indicators, the MACD now has a negative reading after last week's decline, indicating that Sembcorp share price may move in a downward trend. The latest RSI reading at 52 points is just 2 points away from the 50-point neutral mark, after hitting a peak of 79 points in the early part of March. This signals that the uptrend momentum has already peaked, and the momentum in Sembcorp share price is coming off and moving in a downward trend, with the MACD and the RSI indicating that Sembcorp share price is likely to move downwards further in the near term. Traders and investors will need to be more cautious and use the 100 days and 200 days moving average at $5.50 and $5.24 as more prudent level of support to accumulate Sembcorp shares further. Based on 11 analysts that's covering Sembcorp share price in the past 3 months, 9 have a strong buy call and 2 also have a buy call. There are no hold and sell recommendations. The 12-month average target price is now at $7.30 with a maximum estimate of $8 and a minimum estimate of $6.80. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insight.